The Dow Jones closes marginally higher to register a record close for the second straight day. A surge in Nvidia shares also sees the Nasdaq and the S&P 500 end above the flat line. Stocks in the Asia Pacific have opened largely lower despite a subdued handover from Wall Street. The GIFT Nifty is also suggesting a muted start for the Indian markets. Crude prices fall, with Brent falling below $80 a barrel on hopes of production halts in Libya being short-lived. Gold prices also hit record highs above $25.50 an ounce. Sources tell CNBC TV18 that the NSE has filed an application with the SEBI for a no-objection certificate for its IPO. The purpose of the NOC is to get SEBI's nod from the department concerned with market infrastructure institutions. And Jay Shah gets elected unopposed as the next independent chairman of the International Cricket Council. The current BCCI secretary will take over his new role from the 1st of December. It's midweek and we are back with another episode of Power Breakfast this morning on CNBC TV18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring this morning. It's a largely quiet start across the Asia Pacific, as was the handover from Wall Street as well. As you can see, both the Taiwan and the Hang Seng index are trading absolutely flat, just below the flat line with a marginal negative bias. Even the Japanese indices are having a very quiet start to the trading day. The Nikkei is down 0.25%. The Australian indices, though, are down close to 1%, but they don't command that much of a weightage across the Asia Pacific. The Shanghai Composite has also opened absolutely flat. The Kospi in South Korea has opened with losses of close to 0.5%. So an absolutely flat start for the Asian markets this morning. And pull up the GIFT Nifty as well, and that will give you an idea of how the Indian markets are likely to start off. There you can see an absolutely flat opening there as well. Just 7.5 points lower is what the implied open is suggesting. Now remember, we are coming on the back of 9 days of gains for the Nifty. We'll talk more about that as we go on in the show. But as of now, the cues are absolutely subdued going into midweek trading. And as we mentioned, the Wall Street handover was also absolutely flat because investors are looking ahead to a major earnings report, and that comes from Nvidia. Both the S&P 500 and the Nasdaq gained close to 0.2%, and the Dow Jones closed just above the flat line. CNBC's Pippa Stevens gets us a wrap of all the action on Wall Street.
U.S. markets closed basically flat across the major indexes Tuesday, as Wall Street waits for this week's most anticipated set of earnings when Nvidia reports after the bell on Wednesday. The Dow up 10 points, the S&P gaining 9 points, and the tech-heavy Nasdaq rising 29 points. Eli Lilly is now selling vials of its popular weight loss drug Zepbound directly to users for as little as $3.99 per month in an effort to get the medicine out to people whose insurance doesn't cover it, such as Medicare patients. The move also tries to expand the supply of the drug as demand skyrockets and ensure that people are safely getting the real treatment rather than cheaper copycat versions. Zepbound is typically sold in an auto-injector pen. With the vial, patients need to fill a syringe on their own, but that also saves production time, allowing more people to get the drug. Even with sky-high mortgage rates, home prices in the U.S. hit an all-time record in June. That's according to the S&P Case-Shiller Index released today, which says prices are more than 5% higher than they were last year. New York saw the highest annual gain among the top 20 cities, followed by San Diego and Las Vegas. That's what's happening here in the U.S. Back to you in Mumbai.
Pippa Stevens, thanks a lot for that update from Wall Street. Let us now listen into some important opinion coming in from market experts on the rate cut expectations from the U.S. Fed and the overall market outlook for Wall Street.
I think they'll cut in a series of 25 basis point moves. I think he laid out some of the rationale for that. The economy is still doing very well. Unemployment has been creeping up, but I would say only creeping. And frankly, on the other side, inflation has been coming down, but it has been creeping and uneven as well. So I think wisdom of the committee will be 25 basis points. How far will they go? I think only time will tell. I think the market will be very focused on incoming labor market data, ignoring the fact that Powell said they're not data point dependent, but data dependent. But yes, on the committee, I think 25 is probably where most people are centering their expectations for the upcoming meeting.
We would agree with Chair Powell and the Fed's assessment that really it's not like there's no inflation risk ever. I think it's going to be a feature of the next decade. Sometimes you have these inflation shocks. But cyclically, it does seem like inflation expectations are anchored again, and really we're just fighting this very idiosyncratic last two battles of auto insurance and shelter costs. So really, it does seem like the momentum is really much more focused on the labor market. And next Friday, of course, is key, as well as every single Thursday, 8:30 a.m. jobless claims and the whole mosaic of jobs data that comes out. So for us, it's still base case. Growth is just normalizing, soft landing. But I do think in terms of portfolios, whereas before it was diversifying inflation shocks, we still need to do that, plus make sure that we diversify growth shocks.
That's all we have on the global market action. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course, the setup on the F&O side of things. Now, well, we're coming on the back of 9 straight day of gains for the Nifty, but it was a case of so close yet so far in yesterday's trading session. We fell 5 points short of making a new record high, which was 25,078. We made an intraday high on the Nifty, which was 25,073, and we reversed from those levels to close absolutely flat, but just above the flat line with marginal gains for the index. So continuing to trade above 25,000 is the Nifty, but still not finding enough strength to cross the previous record highs. But the Nifty Bank is the one to watch out for, because that is the index that led to the Nifty closing above the flat line yesterday. It was an outperformer in yesterday's trading session, closing above that mark of 51,250. The positive bit is that it is making higher highs on the charts now almost every single day for the last 8 trading sessions. We made an intraday high yesterday of 51,400 but could not sustain above those levels. Today being the monthly expiry of the Nifty Bank, so we'll keep an eye out on that. For the series so far, the index is still down around 250 points. The broader markets did well yesterday. The action was in the small cap space, plenty of stock specific activity taking place. The mid cap index also did fairly well, 0.5% there as well. Some important cues to watch out for today. I mentioned it's the monthly expiry for the Nifty Bank today, so we'll keep an eye out on that. The commodity prices are the ones to watch out for, because they are seeing some very sharp swings over the last few trading sessions, and how would that impact most of these commodity linked names, be it the OMCs or the metal prices. So we'll keep an eye out on that. And of course, companies continue with their AGM, so if there is any more commentary coming in from that. Some key questions today, of course, whether the Nifty Bank has enough strength now to go past that 51,500 mark to end positive as well for the series. And of course, there has been a lot of surge in these Tata Group companies, be it Tata Tech, Tata Elxsi, Tata Investment, whether that continues as well as has been the case over the last few trading sessions. We'll keep an eye out for that in today's session as well. And of course, will this spate of block deals continue as well? We saw a lot more yesterday as well, be it in Rolex rings, in Tata Technologies, in Aavas Financiers. Will that continue into today's trading session as well? The handover from Wall Street, as we just mentioned, has been absolutely flat, and the GIFT Nifty is also indicating a very quiet start for our own markets. But moving on to the stocks that you need to keep an eye out for in today's session, Abhishek joins in with that list. Abhishek, good morning.
Good morning, Homas. To begin with, ICICI Prudential, they have received a GST demand notice with respect to interest and penalty also, which worth about 429 crore for the assessment year of fiscal FY 2020. So Jio Financial Services, they have increased their holding in Jio Payments Bank from 78.95% to 82.17%. So they have bought about 6.8 crore shares worth investing about 68 crore into the Payments Bank. NBCC, they will consider the proposal for issue of bonus shares on 31st of August. Asian Energy Services has approved fundraising of 160 crore via convertible warrants. LTI Mindtree, now Karnataka High Court has stayed the GST demand order worth about 378 crores. Just to alert our viewers, LTI Mindtree had written a writ petition against GST demand order in Karnataka High Court on 20th of August. Aditya Birla Capital, they will invest about 300 crore via rights issue in Aditya Birla Housing Finance. Just to alert our viewers, as on Q1 FY 25, the CRAR of the company was close to about 16.5%. Gensol Engineering, they have launched subsidiary Scorpius trackers in the US, which is targeting about 2,000 megawatt of annual supply by 2025. 28. Now, PNC Infratech declared the lowest bidders for a project worth about 380 crore from NHAI. Now, Office Space Solutions, they have signed largest managed aggregation deal of about 3 lakh square feet with Nyati Group. Back to you.
Abhishek, thanks a lot for that. We'll keep an eye out on all of these names. And finally, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. We almost made a record high yesterday, but that was not to be. What's the setup looking like on the F&O side?
Morning, Omar. So we are seeing consolidation near record levels. So for 2 days in a row, we saw Nifty trying to hit fresh high, but seeing minor profit booking from that level, and at the end, closing near flat line. And for today also, GIFT Nifty is indicating a start near flat line. Talking about the institutional activities, FIs bought shares of more than rupees 1,500 crore, while DIs have sold shares after buying for 16 sessions. And yesterday, they have sold shares of more than rupees 600 crore. On the future side, total buy figure was more than rupees 2,000 crore. Even for Nifty, FIs bought shares of nearly rupees 500 crore. And for Nifty Bank, they have bought shares of almost 1,600 crore and have added long contracts of more than 86,000, and with this long percentage exposure has increased to 57%. That is highest in last 3 weeks. On the options front, for the call side, we are seeing major activities now above 25,000 level. So for 25,100 call, we saw addition of nearly 16 lakh shares with premium at 44, and for 25,200 call, we saw addition of more than 6 lakh shares with premium at 18. And on the put front, 25,050 strike saw addition of more than 3 lakh shares with premium at 96, and for 25,000 put, we saw addition of nearly 3 lakh shares with premium at 71. So talking about the important levels for Nifty, now support is seen somewhere around 24,970, which is also 20-day moving average, and resistance is now seen somewhere around close to 25,200. Lastly, stocks in focus, there are 4 stocks in the band. Those are Balrampur Chini, Birla Soft, Hind Copper and India Cements, and apart from these, keep an eye on 2 stocks, REC and PFC, which have been buzzing off late.
Sudarshan, thanks a lot for that update. Time for a short break here on Power Breakfast. Up next, Union Minister Nitin Gadkari chairs a meeting with the auto industry and forms a new vehicle scrappage policy. More details on this on the other side. Stay tuned. We'll be right back. Welcome back. Shifting focus to the primary markets now as we get developments in the much-awaited IPO of the National Stock Exchange. Sources have told CNBC TV 18 that the exchange has sought a no objection certificate from SEBI. The NSE board met yesterday and approved the decision to file for an application seeking the NOC. Now, this NOC is given to take SEBI's go-ahead from the department that is concerned with market infrastructure institutions, or MIIs. Now, it also needs to get SEBI's clearance for NSE to file an IPO DRHP as well. Well, Finance Minister Nirmala Sitharaman defended the unified pension scheme, saying it's fundamentally different from the old one. Now, she also said that there would be no U-turn by the government on the UPS. The Finance Minister also said that the rate rationalization would be discussed at the upcoming GST meet on the 9th of September. Sapna Das filed this report last night.
Well, as the Finance Minister is indicating from the upcoming GST Council meeting to be held on 9 September, it's likely that a discussion on rate rationalization is likely to get kick-started. Of course, a decision is unlikely because a lot of reports are still awaited in terms of what is the position so far, in terms of what the officers panel, the kind of feedback that they have received. Also later on there'll be some GOM meetings in terms of this issue, but it's likely to start coming up for discussion from the 9 September meeting, and probably over the next 2 to 3 odd council meetings, maybe they'll be in a position to come to some kind of a decision. But this is an important indication coming from the Union FM that September 9 is when the next council meeting happens, rate rationalization is going to be a discussion point on the agenda. That's one. Second, she's also amply clarified that there is no U-turn or rollback that the government is doing by introducing minimum pension or rather assured pension under the UPS. It's a fundamentally different scheme from the OPS, and it's fully funded, and it's totally up to the states to implement it. They are independent decision makers. If they find merit in it, they will go ahead with it.
Sapna, thanks a lot for that update. Now, Union Road Transport Minister Nitin Gadkari chaired a session at the automobile industry body SIAM in Delhi yesterday. Now, in a statement on social media, Gadkari said that several commercial and passenger vehicle makers agreed to offer discounts against scrapping of older vehicles with a valid certificate of deposit. Parikshit Luthra now joins us to take us through the details. Parikshit.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or rupees 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers, including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai, have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers, including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
Parikshit, thanks a lot for that. Now, Big Basket is not late to the quick commerce party. That's the word from the company's founder, Hari Menon, as the online supermarket goes full tilt on its quick delivery service. Speaking to CNBC TV 18, Menon said that Big Basket is targeting to expand to 700 dark stores from the 400 that it has currently. The company also aims to deepen their product pipeline for 30-minute deliveries from 10,000 to 30,000 stock keeping units.
If you see Big Basket today, we actually have 2 offerings that we have on the app. You have something called Super Saver, which is our slotted delivery option, and then you have BB Now, which is our quick service, quick commerce option. So what we're essentially doing is basically bringing both these together into one interface, and that one interface will essentially carry the entire range of 30,000 products, which was available on both these platforms and both these offerings on one interface. We were seeing over a period of time that customers are getting more and more comfortable with quicker deliveries. And hence, that was one of the reasons that we started moving a lot towards delivering fast. If you recollect, even our slotted delivery, which was typically in the past used to be same day, next day delivery, we had moved it to a 2-hour solution. And that customers really were happy about and lapped it up. So essentially, we were seeing, a very strong movement of customer preference to quick deliveries.
Quick deliveries, the need of the hour. Time for a short break here on Power Breakfast. Up next, we get your cues from the commodities market. Stay tuned. Back on the other side. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, gold to begin with, Hormuz, because that's still holding above $2,500 an ounce, not too far away from its all-time highs. The weak US dollar rate cut expectations have been constantly supporting gold, and every pullback or a correction that we have seen has been quite shallow, telling you that the strong hands have continued to hold gold quite firmly. And there are various reports now coming in suggesting that the gold prices can go much higher. You have almost gold telling us that $2,650 an ounce by year-end is what you could see. Citi is talking about $3,000 in the next year. Saxo Bank is talking about $2,700 an ounce of gold by the end of this year as well. While the gold prices have continued to trade firm, it is the crude oil prices which finally are looking at some profit taking. We have seen more than 2% of decline in the overnight markets for crude. Prices did gain 7% in last 3 trading sessions. So this is some profit taking coming in as the markets await further development and various events and issues going around in the world. With Libya announcing total closure to its oil fields, it's supportive. But the street is also looking at the demand scenario, which from China now seems to be factored in. Our latest Goldman Sachs report says that they're looking at Brent trading range now revised $5 down to between 70 to 85 for the rest of this year.
Well, all that glitters is gold, I guess, at least for the time being. Manisha, thanks a lot for that update. Well, more news from the world of cricket now. BCCI Secretary Jai Shah was elected unopposed as the next chairman of the International Cricket Council, or the ICC. Shah will take over from current chairman Greg Barclay from the 1st of December. And at 35 years of age, he will be the youngest ever chairman of the ICC. Shah will hold the position for 3 years with an option to extend it for another 3. That's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.